question is perhaps I'll rewind a bit here and talk about December 2023. If we had to discuss outlook of the current year, it was all centered around central bank policy action and multiple elections, which added to that element of volatility for financial markets. So to your mind for 2025, what could be or what are those calendar events which could inject that element of volatility?
I think the most important is 20th of January. So when the US president takes office, it becomes very critical because the team has been working on a series of policies. This time, the team that has been built around him are people who have been very carefully chosen, and there's been less of an element of surprise that how could I win and all of that. Plus, some of the policies which it seems are being drafted are designed to not get stopped by either the courts or the legislature. And therefore, the first couple of weeks, first couple of months after 20th of January, you are likely to see significant policy pronouncements. And so that's a very important catalyst. I think in March and then later in the year, there are elections in Europe, which become very important. Because in Germany, France, I think remember that a lot of the DXY strength, the trade-weighted dollar strength, is actually coming at the expense of the euro. And the euro is weak because if you've seen the spread between the French government bonds and the German government bonds has actually widened very sharply. So the typical Greece, Italy, Spain, the yield spreads are actually coming off, but French yields are going up, and that actually is a huge concern. So getting some political stability and therefore clarity on the fiscal front on both Germany and France becomes very important. I think the government, the Chinese government, and its response to whatever the US government does in terms of what it allows the RMB to do, it becomes a very, very important measure. The Chinese economy is struggling with deflation. So already, if you remove pork and vegetable prices, their CPI is negative. And after 14 years, they have gone into a loose monetary policy stance. And they've also allowed their central bank to potentially monetize government spending, and which means that they are ready to let the RMB weaken. And if that happens, then you could see a lot of currency volatility all across the world. So all of these are very important sort of data points to keep monitoring.
Fantastic.
If you like this video, then like, share and subscribe to ET Now.